It's the final trading day of the week. Welcome to Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi Iwago. On the show today, global markets jitter as U.S. fires cruise missiles against an airbase in Syria. And Fitch Ratings cut South Africa to junk. The International Monetary Fund concludes 2016 Article 4 consultation with Djibouti. Let's get started. And of course, we're starting off in Europe. Bosses there were mostly lower Friday morning after the U.S. fired some cruise missiles against an airbase in Syria, raising concerns on an escalating conflict in the region. It's about 2:31 p.m. now in Frankfurt, and the market is about to close. Let's talk to my colleague there, Janelle Dumelon, to know how the geopolitical volatility is playing out there. Hello, Janelle. Thank you very much for joining us on this day. Now, are the markets still in shock reaction to the retaliatory U.S. missile attacks on Syria's airbase on the day Chinese leader Xi Jinping is on state visit to the United States?
Well, yes, European indices are still seeing weak trading today, like the DAX here in Frankfurt and the CAC 40 in Paris. And that does, of course, follow market jitters from across Asia, where investors fled riskier asset classes like stocks into safer havens like gold. Now, some of that risk aversion is still there, although it has to be said that the impact of that is easing somewhat, given the relatively predictable reaction coming out of the international community. So it's safe to say that investors are careful, but not exactly panicking. Now, this, of course, is a typical market reaction to political news. First, the news is announced, and then you have a new knee-jerk reaction on the markets, and then investors recover until there's a new development. Now, a good case in point there is the China-U.S. summit that you also mentioned. That has been the source of so much market anxiety this week. But now that we've come to the last day of the trading week, it's just not figuring so much on trading. There is not as much nervousness. But of course, the trading day is not over yet, and investors are still going to react to the jobs report coming out of the U.S. Now, more jobs with higher wages would fuel speculation that the U.S. Federal Reserve is on course to raise the interest rate 3 more times this year, at least, and they would have to price that in.
Now, another event happening there in Eurozone is the finance ministers' meeting taking place in Malta. Now, aside from the Greek bailout talks, what other topics will dominate the ministers' agenda?
Now, you're right. Greece obviously was the dominant story from that meeting, but other topics did find their way to the agenda, like the reshuffle of jobs at the very top of the Eurogroup and the European Central Bank. Now, the Eurogroup is headed by Jeroen Dijsselbloem, who is also the Dutch finance minister, and it's his future at the group which is most in question at the moment. His term actually ends in January, but there had also been calls for him to resign after he made some controversial remarks about the southern European countries, about how they didn't deserve any aid if they were going to squander their money on, quote, drinking and women. So now he said he's not going to resign before his term is over, but he's unlikely to retain his post as the Dutch finance minister anyway, given that his center-left party lost a general election in March in the Netherlands. Now, there's no rule that says he actually has to be a sitting finance minister to be part of the Eurogroup, but that would certainly be unprecedented. Now, his post isn't the only one potentially going to be occupied by a new person in the next years. In 2 years' time, 3 members of the executive board of the European Central Bank are also set to go. Among them ECB chief Mario Draghi. So who will be the architects of economic policy and financial policy in the Eurozone in the next years is also on the minds of those attending the summit in Malta today.
Now, let's look at the speech by the Germany economy minister. He says that the Merkel's economy is strong enough to weather the 2 years of Brexit negotiation period and even beyond. Now, how much confidence boosting is this to investors, asset holders, and the business sector in general?
Well, there has been this running consensus that the fallout of the Brexit will impact the United Kingdom much more than Germany. In fact, we might even point out that some parts of Germany even see some opportunity in the Brexit, as perhaps banks and financial services could move away from the city of London to come to, say, here, Frankfurt, another financial hub. But of course, those comments from the economics minister just represent one package of statements from the government. Now, this week, the foreign minister also said that he expected Brexit negotiations to be difficult. The German president, Steinmeier, said that condemned Britain's decision to leave the European Union as irresponsible. And of course, on top of all of that, investors are aware that Brexit runs alongside other risks like rising protectionism from the U.S. and because the Trump administration has always been very critical of Germany's trade surplus and growth risks coming out of China. And it is this bigger picture that investors will be looking at.
Well, General, it's been a wonderful outing with you this week. I can only say, enjoy your weekend. We move over now to the U.S., where the stock index futures pointed to a lower open on Friday morning after President Donald Trump ordered missile strikes against a Syrian airfield. Markets will also be keeping a keen eye on any developments coming out of Florida, where President Trump will continue talks with President Xi Jinping of China. On the data front, Friday will see non-farm payrolls and unemployment rate data released at 8:30 a.m. Eastern Time, with wholesale trade data set to come out at 10 a.m. and consumer credit due to be published at 3 p.m. Eastern Time.